So we'll remember that we have a 5-step process if we're going to have a capital gain. And our first step, step 1, what is a CGT event? Now, according to section 102-20, a capital gain or loss can only arise if a CGT event happens. So section 102-20 tells us that if we do not have a CGT event, then there will not be any CGT to pay. So in simple English then, what is a CGT event? A CGT event means we have disposed of an asset. We've triggered a disposal. So how do you dispose of an asset? Well, you could sell it, that's one. You could give it away, that's two. It could be destroyed in a flood or in a fire. Or maybe you lose your asset. You can lose a CGT asset. Now, according to the Australian Tax Office, there are more than 50 ways to dispose of an asset. More than 50. Why are there so many? It's because the government likes to tax you. What we're saying here is that there's more than 50 ways for us to pay tax, and certainly the government is very happy about that. Now, in this short course, we're going to be focused on two CGT events, A1 and C1. Now, these two are the most popular CGT events. In fact, they cover over 90% of all CGT transactions. So we have our CGT event, and according to Division 104, it's going to tell us the cause of the event, the timing, and any amount of a capital gain or loss. So it's describing three things. It's telling us what, it's telling us when, and it's telling us the amount. And now we're going to have a look at our first CGT event, CGT event A1. So our CGT event A1, in this example, we've sold an asset. Maybe we've sold some shares. That is the what. That's what we're doing. And we'll talk more about CGT assets later. The when, that's the date. So if I sell some ANZ shares on the 30th of June, but then on the 4th of July, the money goes into my bank account, what is the date for the capital gain? Am I going to use 30 June or am I going to use July the 4th? The answer is I'm going to use the date of contract. Now, there can be exceptions, but normally the date that you're looking for is the date of contract. So if you were studying this in your exams, if you see a date of contract on the exam, that's the date that you highlight. And finally, this CGT event A1 is going to tell us the amount. And in this case, it's going to be the sales price less my cost base. So CGT event A1, very common for my clients. What happens though if there is no contract? What happens if we don't have a contract? Then it's when the physical ownership occurs and it gets transferred. So on the date that the property or the shares gets transferred to your spouse, to your wife, to your children, it's the date of transfer if there's no contract. Now we've got an example here. On 1 June, David enters into a contract for the sale of land. The contract is settled on the 1st of September 2018. He's made $100,000. In which year is that gain assessed? Is it assessed in the 17-18 year or the 18 or 19 year? Hopefully everybody realizes that it's the date of contract, 1 June, therefore it's going to be in the 17 and 18 financial year. Our next CGT event is CGT event C1. It means that our CGT asset has been lost or destroyed. So let's say my factory burns down, it's a pile of ashes, I am the owner of that factory. What happens? And it all comes back to if our factory is insured or if it is not insured. If the factory is insured, let's have a look at the example here. On 17 June, Max acquired a factory in 2008. How much? $500,000. On 1 May, his factory is destroyed. He receives compensation. It's insured. He gets 1.2 million. Guess what? Max has a capital gain of 700,000. 1.2 million less the 500,000. As he's insured, it's a CGT event C1. A capital gain has occurred and the capital gain is $700,000. And that capital gain occurs on the date of 1 August 2018, not when he discovers that the factory has been burnt down. If there is no insurance, then there's no proceeds. The capital proceeds will be zero, nothing. Therefore, Max is going to have a capital loss of what he paid for it, 500,000. Capital proceeds zero, cost base 500,000. He has a capital loss of 500,000. But what is the date? Is the date 1 May 2018 or is the date 1 August 2018? The date is when the factory burned down. It's when we first discovered that the factory is burned down. Therefore, it's 1st of May. And he will have a capital loss in the 17-18 financial year.